Let's start this off. So I'm David Brown, I'm from Finastra, and my role is looking after payments consulting in the Asia Pacific region. I've been around the industry for a number of years. I did work for 10 years for a bank in Australia, part of the Swift user group, so very appropriate being here today to be talking on that. But I've also dealt in my time as being with a vendor with many of the large banks, not only in the APAC region, but around the world. But today, I'm really privileged to have here on stage with me Radha Suvarna, our Chief Product Officer, and I'd like Radha just to introduce yourself.
Thank you, David. Thanks everyone for showing up. I'm Radha Suvarna. As David said, I'm the Chief Product Officer for the payments business in Finastra. Been in this role for about 2 years, and prior to that, I was for 27 years I was a banker. Most of it with Citibank for 25 years, and a couple of years with a regional bank in the US up in New England, Boston area. So happy to be here.
Thank you, Radha. And today we're going to explore the payments trends and what's happening in the ever-changing world of payments and the modernization that's taking place with that. So Radha, if you'd like to maybe share some of your thoughts on what you've seen and look into what's taking place out there in the market.
Yeah, no, absolutely. You know, the way I'd like to think about, as you see on this slide, the first two pillars, before we delve into the trends within payments, if we just step back a little bit and look at the broader trends, a couple of things I would like to call out. One is the open finance, and the second one is more just broader trends that are impacting financial services industry in general. You know, within the open finance, you know, I've been in the banking and financial services for 27, 28 years, and many of you have, and we all have seen the continuous rise of interconnectedness and inclusivity in the financial services industry. What I mean by that is, you know, interconnectedness being customers, bankers, financial system, ecosystem players are ever more comfortable to partner with other players who they would have considered at some point in time as competitors. But now they're much more open. And obviously you may have heard there's this thing called co-opetition, right? We are competing but we are cooperating. So that's kind of the new world. That's driving, you know, inclusiveness. We are able to provide value, you know, better services to more customers, whether it is corporate customers, small business customers, etc., that we haven't been able to provide some services like cross-border payments, etc. So inclusivity is driving. So open finance is driving that trend, and that's impacting a lot of what we do in the financial services industry, and particularly in payments. That's kind of one. You know, the second one, I would say more global and broader, you know, technology trends are, you know, one is just cloudification. I would only qualify that by saying it's more deliberate cloudification, meaning that, you know, I think there is a bit of a trend that cloud is not new necessarily, but in the financial services industry particularly, one size fits all doesn't work. You know, depending on the bank's needs, whether it's a large bank or the mid-sized bank, different banks are trying to make different decisions around cloud, whether it is open cloud, public cloud, hybrid, completely SaaS solution, etc., etc., and to drive the right outcomes for their business. So I think that trend continues in my mind. I think those are kind of the broader trends that are really impacting financial services industry and payments.
And just to add to that, from the experience I'm seeing here in the Asia Pacific region, you know, we've just recently had a couple of banks going live on the cloud in the region here. When I see RFPs and that come from the banks in the region looking to put in a payment hub, again, some of them are still saying on-premise, but a lot of them now are asking about cloud requirements and actually wanting to put it into the cloud. So it is very much a trend now across the large part of the region.
And you know, look, I mean, you know, no global technology trend discussion is complete these days without talking about Gen AI. I think that is something that everyone is trying to get their head around. It clearly is something that's going to drive, for payment industry, lots of efficiencies, both in terms of how we deliver better customer value propositions and better experience, but also internal efficiencies in terms of engineering, operations, reconciliation process, etc. So I think those are kind of the broader trends that we are tracking.
And again, the Gen AI, lots of conversations around this whole week that's been there, and some of our specific banks come in and talk about how they need it for their operations area, how they want to do changes to their enrichment of their payment messages, how they can be more efficient with using it as well. So we're working with a lot of initiatives there to help improve the experience for the banks. And then, as Radha says, of course, our internal things that we're working on as well. And again, we've got one of our team who's going to talk in a lot more detail about Gen AI in detail tomorrow in a session as well.
And then as I said, then let's delve down to payments, right? Within payments industry and the trends that are really impacting, we are tracking, call it a set of 6-ish trends that we are tracking, particularly as we talk to our customers. First and foremost is start with the customer and the customer demand around speed and transparency in payments. It's not new. Those of us who have been in payments, we have kind of seen this trend emerging. Customers are, they want funds to be delivered faster than ever before, whether it's real time, near real time, etc. And equally importantly, the transparency in terms of how much it's going to cost them, the fees, trackability of the payment, etc. So that's kind of the first customer demand that's informing how banks are thinking about it, how we are all thinking about it, delivering against that particular customer demand. Second one I would say is...
I'd stop you for a minute there, if I may. I'd like to just throw in on top there as well. We're seeing in some of the conversations here, and give a real example of that speed sort of conversation, as being talking to some of the banks here and about it. If you think of your inward SWIFT payment messages today that come in, because of time zone differences, they may well stop in the bank till the RTGS becomes available. So what we're seeing as a big trend now is in countries is very much moving those payments through the immediate payment scheme. Now, a lot of those payments come in already in domestic currency. So if they come in at 2 a.m. and that your immediate payment scheme is open, much more opportunity these days for those to go straight through. Therefore, you're meeting those G20 targets as well that people talk about a lot these days, by being able to do that. So this is going to help meet those targets.
Yeah, no, absolutely. And the second one I would say, which is kind of the result of the first one, is, the immediate payment schemes in various markets are continuing to be pushed by the regulators and in the industry bodies. And that's not necessarily new news, but I think it's continuous. So, and in some markets like US, where I'm based at, there are 2 immediate payment clearings, Fed ISO and real-time payment. So I think that's happening. But what's also, as you know, is happening is those immediate payment schemes are on ISO 20 or 22 XML based, which has a better and higher payload and more number of data fields. What does that mean for the banks? I think banks are now, or potentially are able to include, for example, invoice information inside those data fields that simplifies the reconciliation process and reduce the operations and out-of-band settlement, etc. So I think that's number one. The second thing I would say is there's a potential to connect multiple ISO compliant interoperable rails across the markets for simplifying the cross-border payments. That's kind of the second trend I would say that we are seeing and tracking. The third one is the legacy, I wouldn't say legacy, but more established payment rails. For example, FedNow FedWire in the US market, SEPA in EU, they are also migrating the specs to ISO 20 or 22. That is driving a lot of requirements from the bank's part to do the technology investments, and that's kind of one of the other trends that's driving how banks are thinking about kind of how the migration is happening. Now,
well, sorry, just on those last couple of points there. So like on that, in that number of the RTGS schemes in this region as well are SWIFT based and that, and they've already, a number of them are moving or have moved and got little changes to align better with that CBPR plus standard that SWIFT is adopting across the general one into the RTGS schemes. And that's again allowing us to adopt better standards, making the processing and throughput of these transactions a lot better. The other one that's also coming into this is when that standard will help too, is with things like the intermediate payment schemes are actually interconnecting now, so between countries. So you've got different countries like already Singapore and Thailand. Other countries are connected up, Thailand with that UPI in India has done a great job of being able to spread out and connect up to countries all around the world with the immediate payment side of things. Having these standards and being able to align them is making it a lot easier for organisations like, say, Nexus and that to put in place more efficient interoperability between those schemes, rather than each country having to do a bilateral arrangement with the other immediate payment schemes around the world. So again, this is all starting to tie together nicely in how the market is moving as a trend.
And what is also driving this is the other thing is happening is now suddenly banks have multiple clearings, and each of the clearings and payment rails are operated by different engines. Mass payments, they have one engine. For high value payments, it's a different one. Immediate payments is a different one. Now they are thinking, okay, you know what, we need to consolidate and have a payment hub of sorts, not for the sake of it, but to drive incremental client value. So as an example, in US market, Fed I saw RTP has 1 million limit. Now an RTGS transaction of $100,000 can go in either one of those rails. Right now it's not being offered by many banks, but banks are starting to think like, how can we integrate all these payment rails into one orchestration, and therefore have the need for the payment hub. And that's kind of one of the things that's driving. And the last thing I would say, David, on the broader trends that are informing how banks are thinking about modernization is the alternate payment rails. Because Swift is obviously very good and has been established for a long period of time, but for low value transactions, the alternate payment rails like Visa Direct, MasterCard Move, and Tunes, some of them are here, provide an alternative. And banks are starting to think, okay, how can we deliver those propositions as an extension to existing payment rails? So those are kind of the broader trends that are being kind of impacting how folks are thinking about modernization.
Yeah, and again, just on that, the example I gave a moment ago about the inward SWIFT going out an immediate payments rail is another reason why being together on a consolidated payment hub will help make sense. So yeah, thank you for sharing those thoughts and insights there as to what's happening. And again, the banks are really talking a lot now, and most of the RFPs and that, of having these alternate rails. It's very much out there. I know we're at a SWIFT conference, but it's always good to be a little bit provocative and out there and talking about it. You also get in play as well, not only the providers like the Wise and the Tunes and that you mentioned, but also the banks themselves have those networks that they provide to customers as well. So being able to connect to them as well as part of this process is something that we're really seeing as a trend in there. So Radha, if we'd like to move on and talk a little bit more and drill into a little bit of some of the technology changes that are happening out there.
Yeah, so I think the question, David, then becomes, how should banks and financial ecosystem players think about modernization? At a highest level, I would say, fundamentally, to react to these ever-changing requirements that seem to be happening from different directions that we just talked about, what is going to be important is have a guiding principle for technology transformation that is grounded in two principles, I would say. One is modularization, and two is open. Open being open APIs, etc., etc. And look, we process, as an example, Finastra. We have been around for 30 years, and we process trillions of dollars of transactions for our bank customers who are, we have 500 plus bank customers with the largest banks in the world, you can name it, around the floor, are customers of ours. And as they are thinking about their modernization, they are looking to us to play our part in helping them drive their technology transformation modernization strategy, particularly with payments. So what I thought I'll do is, let me just explain and use our own example of how we are thinking about it and how we are helping our bank customers think about transformation. Now, first I would say, and this is broad and illustrative, a bit specific to what we are doing at Finastra, but very relevant to pretty much any of the financial services ecosystem. At a very fundamental level, we need to think about what we say, the underlying technologies at the very bottom: cloud native and open source. Cloud native, cloud agnostic, etc. What do I mean by that? So let me give an example. Many of our customers are on Azure, and our own internal hosted solutions have been on Azure. But very recently, one of our customers wanted to have a containerized deployment on AWS. one of the largest banks in Australia. So the way we architected it, we have been able to deliver to the client needs. So my point, I guess, is as we think about cloud, the same thing would apply to the banks as well. What is important is A, it needs to be cloud native, B, it needs to be cloud agnostic. So the foundational infrastructure needs to be enabled for that. The second one, in the same one, I would say open source technologies. Now, we support Oracle as an example in our core product, but we are seeing a lot of demand for open source technologies like Postgres that gives them better options, reduces the cost of ownership, etc. So how do we think about enabling our core infrastructure to enable that for our customers and clients? That's kind of at the very fundamental level. The second level is what you might call microservices chassis, and that's what we are calling it, which essentially is a set of core generic building blocks and APIs to do things like communication, security, telemetry, data, etc. that could be used for various use cases. That's kind of the second level of decomposition, if you will. And then you have the third level that you see is what I start to call reusable technical modular technical services. Things like interface gateways. So from payment systems to various core banking systems, identity verification, those sorts of capabilities that are core technical reusable capabilities that microservices can stand on their own. And then finally, the reusable modular business services. What do I mean by that? So if you take the entire payment engine and payment hub as an illustration and break them into multiple modules, there is a routing module which figures out exactly where the payment needs to go. The second one is OFAC sanction screening and risk management capabilities, etc. And then actual payment execution capabilities. And so the way to think about it is, so how do we kind of deconstruct the monolith in any kind of architecture? Because here's the reality, right? Financial services industry is not starting from scratch, and many banks, many of our customers have legacy systems. How do we kind of find a way to migrate and transition is going to be the key. And while this illustration might be very specific to payments and payment industry, but that's kind of how our banks customers are thinking about it. And what we are trying to do is, I think for the vendors, the rest of us, Finastra and their competitors, etc., how do we think about aligning our strategy and take the bank customers on a modernization journey, which is with the right pace, and migrate from where we are to where we need to get to. So hopefully that helps. That's kind of how we are thinking about it.
Thanks very much, Radha, on that. And just to maybe tie this back into, say, some of the examples we were talking about before, if you think of how we talked about those alternate rails and the clearing there, by able to put in place a good framework, it becomes very easy to incrementally add those additional alternate rails or clearings in there where it's not already supported. So we're already working and doing this with a number of our customers today, that they're finding that value and being able to be able to put that together quickly. And by having this sort of technology enables that much faster than you used to do it in the past. Any other thoughts on that you'd like to share?
I know that you may have briefly touched on it, but how do we think about the value from a bank perspective, right?
Yep.
Like, fine, we'll I've been on the banking side, like I said, for 27 years before I kind of made the switch over to the fintech. How do banks think about the value that they're generating from technology transformation or payment transformation? And the way I would think about it is probably use a sports analogy. Offense and defense, right? Banks, at the end of the day, have the foundational responsibility to enable trusted and secure payments that operate 24/7, whatever it is the case, that really underpins the global economy. I think that's first and foremost responsibility, and do that in a compliant manner, right? That is their responsibility, but at the same time, how do we drive then the progression towards value? So that's kind of the context. And from an offense part of it is, by driving technology transformation and modernization, bank customers and our customers, which are banks, can deliver better value propositions to their customers. So let me give an example. We talked about routing module. If we had the right routing module, and for a particular use case, if we are able to decide and say we put it on instant payment rails depending on the limits and the use case versus an RTGS rail, or in case of cross-border, an alternate payment rail versus SWIFT, etc., that can clearly drive incremental value in terms of cost, efficiency, price, customer experience, etc. So how can we think about those sorts of examples by leveraging the technology to drive better value to their customers? And if we did that, that would, then they can start to generate incremental client satisfaction, competitive differentiation, and inherently the market share and so on and so forth. That's kind of one way to think about it in terms of offense. And the second one I would say is defense. I talked about it. At the end of the day, bank's responsibility and payment ecosystem responsibility is to deliver compliant solution that is safe and secure and trusted. Now, by having open platforms as an example, if we are able to take advantage of newer technologies from Gen AI to do better sanction screening, to deliver better false positive rates in terms of sanction screening individuals, etc., etc., that can drive incremental value, reduction of cost, operations staff, etc., etc. So I think that's one level of it. The second level I would say is security. Having a modern technology stack will enable that better secured services can be delivered, so that the trust that banks and payments ecosystem offers can be retained. So that's a fundamental defense capability. And you know what? At the end of the day, as in the sports, the best combination of offense and defense is what wins the games. And that's really how our bank customers are thinking about it. As in our conversations with them.
Thank you. And again, just to think of things, that lots of little things we see around this region. Some countries or some banks are very sophisticated with how they're able to process payments efficiently in STP, but a lot of other banks and that are having challenges about their manual processes and that. So being able to do the right routing of payments. Even these days too, we're seeing a lot come into play with liquidity, and the banks having to try to monitor, track their Nostro liquidity, these alternate rail providers, their exposure to what's there and not. So these days there's a lot more intraday liquidity coming into place. So putting in place this sort of framework and technology there allows us to make routing decisions based off liquidity, as well as based off other business rules and processes that are there, depending on what your correspondent relationships are out there in the marketplace. And again, Gen AI comes into play, as we touched on before, to help tap into these different areas to help get those STP rates going up. So we're seeing the banks really these days already in the 90s and high 90s in a lot of cases, but still wanting to go that extra layer further because it delivers better speed, better transparency for their customers by being able to do those transactions in a timely manner.
Yeah. One of the questions that David comes up in the conversations that we have with our banks is, there is just a lot of things, fast and furious requirements coming from every different direction, even within the space of transformation and technology transformation and modernization. How would banks think about it? How would we think about it? And I would say, just to close as in closing, I think it has to do with the mindset first, meaning a bit of openness to the new, taking advantage of the new technologies as they emerge. I think leaning in and being open is really, I would say, is the first broader principle. Now, I would caveat it by saying it needs to be very deliberate and intentional. That one size doesn't fit all. For some banks, like we talked about earlier, going to complete public cloud might be a good idea. For others, maybe not, depending on the kinds of customers they serve, etc., etc. But the fundamental idea needs to be leaning in as opposed to not. I think that's number one. Second one is partnerships. Look, at the end of the day, a lot of what in the payment industry happens is not necessarily differentiated, right? There are very commoditized capabilities. So, as banks and all of us think about what is core to our business that actually creates differentiation in the marketplace, in case of banks, and what are the kinds of capabilities that are that needs to be done, but they're largely commoditized capabilities. So how do we think about identifying partners? How do we think about making build versus buy versus decision? Frankly, resisting the urge to build everything in-house for all of us, I think it's going to be a bit of a trap that we all have to think about. That's kind of one. The second one I would say within partnerships is which partners we pick. Now, look, at the end of the day, would you go with somebody? What kind of a combination trade-offs you use as we pick partners? Do we want to go with somebody who has the right story around modernization, around microservices and APIs and all of that good stuff, but not necessarily the track record of delivering it over number of years with number of implementations, etc. Now, I'm not saying this versus that. The point, I guess, is the key is payment industry. The first and foremost is it needs to work 24/7. It needs to be trusted, and it underpins the global economy. Therefore, having the right mindset of picking somebody who has been there, done that, but also delivers the modernization as opposed to. So I think that who we pick partners, I think is going to be kind of the second one. I would say is really, really important. And look, at the end of the day, if, as they say, coming back to, we are in a business in payments where it is foundational to the global economy, and we're not going to go from where we are and where we have been to the promised land and the North Star overnight. I think it's about thinking about having the right mindset of open technologies and being open to them, open to partnerships, and having the right kind of decision drivers as we think about modernization. So, look, I'd love to close by saying this is it is an exciting space. Payments is, for those of us who have been in payments business, probably I'm guessing all of us here, it's one thing that's constant in payments is change, and the best way to deal with it is work our technology and the business mindset around modernization aligned with what needs how we need to get there, and do it at the right pace, so that we get there successfully, I guess. So I know we may have few minutes still there, but if there are any questions, thoughts, happy to take.
Any thoughts or comments from anyone out there in the audience? Again, there's lots of trends taking place out there. We could go on, like how a lot of countries now, or banks are starting to take bulk files in instead of just pushing them through the ACH, pushing them through their immediate payment scheme. So, or a mix of the two. Some payments have to go cross-border, some have to go domestic, and so forth. So there's lots of innovations, just little innovation steps that are taking place as well in the marketplace out there. So again, we're always happy to hear and learn anything that you're coming across, and share that with us, and we can feed back what we're seeing with those banks as well. Again, another initiative out there too is, like in Australia, lots of talk about the ACH scheme demising by about 2030. So they're going to be trying to look to push all the payments through the immediate payment scheme in Australia. So again, that's something you need to be able to adapt for, be able to plug and play which ones make sense for you to be able to support those different types of ones.
Awesome. Thank you all.